What's up everybody, this is Ali Taraftar back with a brand new video. So as you know, I'm not a big advocate of Section 609, so I wanted to take this opportunity to explain to you how disputing works. Specifically, let's say you're starting off on your own or you're with a credit repair company, and what are some of the behind the scene things that happen. So my goal here today in this very video is to explain to you and break down step by step how disputing works, what happens when somebody on your behalf or yourself when you send those letters to the credit reporting agencies, and what are some of the steps that happen past that point, And of course, the biggest reason for this video is really to demystify the whole myth of the Section 609 and give you the information that you need to clearly understand the underlying criteria of what Section 609 means. What does disclosure to consumer mean, right? Like, what does it mean to a credit reporting agency and what it does mean to furniture? In addition to that, we're going to demystify a couple of myths in regards to online applications, wedding signatures, and a whole bunch of other things. So let's begin. So first of all, before we continue, if you're here for the first time and you're on my channel and you came across this because of you're looking for a Section 609 credit repair, this is a video that's going to be breaking down exactly the step-by-step process and how that works. In addition to that, we're going to demystify some of the myths out there. So again, if you're here for the first time, don't forget to subscribe to my channel and turn the bell notification on, so every time there's a brand new video like this, you'll be first to be notified. And if you like the content that's being shared, don't forget to give this video a thumbs up. It'll help me, of course, reach out to more people out there and help me create better videos for you. And once again, if you have any questions, don't forget to leave it below this video. I will look at them, answer them, and create videos if necessary out of questions that will be really helpful to everybody out there in the community. So let's begin. So what is Section 609? What is Section 609? So a lot of people out there on the internet, particularly YouTube channels and videos, are explaining, hey, look, there's a credit repair process and it's called the Section 609, and then this is how it works, right? So they break down the specificity of it by saying that, look, if you have handwritten letters, or if you just send this letter to the credit reporting agencies and you ask them for signed documentation, whether or not if they have it, it's very doubtful. So that is why it works. Now, you have to break it down into logical steps, and you have to think about it, and you have to say, look, if Section 609 is based on the premise that the credit reporting agencies don't have signed documentation, why would they start reporting items in the first place? Does that mean that every single item that's there can be removed, right? And if that's the case, then the credit reporting agencies shouldn't even be in business. Don't you think by now, with hundreds of thousands of disputes going on, with hundreds of thousands of templates, by the way, that the e-Oscar system is reading on a day-to-day basis, don't you think by now they would have figured out, okay, maybe this is not a good business practice. It's causing us a lot of time to go into our system and to put the resources, excuse me, and the manpower to dispute these things because of a Section 609. It's inefficient, right? And the credit reporting agencies wouldn't make any money, because the way that their revenues are based on selling of information, it's on sharing of information with merchants and other businesses that are looking to utilize that to promote to you based on your credit conditions, specific financial products and services, right? So if Section 609 works, if they're looking for signed documentation, then by now the credit reporting agencies wouldn't have half the data that they have on the reporting side. They wouldn't have half the revenue of the business, or the business that they have based on all these type of situations, right? So that's the first thing. Second thing, okay, when you go online and when you apply, particularly if it's a credit card or if it's a merchant loan or certain things like that, they never ask you to sign something, right? They don't say print this out, sign it, and send it back. Most of the online applications now is based on authorization. They verify you, they ask you for certain security questions, and then of course from that, if they feel that there are certain other things they need to do, like take it a step further, they will give you a call. On that phone call, they'll discuss all the possibilities of verifying you. What's your previous address, some of the maiden names you have, or certain things like where did you work, how much of the balance do you have on this account, or what's the credit card that you opened at this year. So they'll ask you security questions to verify you, and they have the recordings of that, right? So if ever a subpoena were to be issued to those specific credit card companies based on litigation, they can pull that recording up, and if you're fighting that, then you're in trouble because you lied. Okay, so you can actually get fined. So just an example. So if the businesses out there are putting on online applications, given the fact that they know about Section 609, or they're not stupid, right? Like, they're in business for a reason. They have resources and legal counsel to protect them. And if they're just putting on online applications and people can just get away with it by not paying their debts, I mean, they're asking for trouble. They're asking for basically not being in business, right? So we're talking against the financial system here. So Section 609, signed documentation, wet ink signature, it doesn't work. 1989, maybe. It's been around for a few years. It's nothing unique. It's already out there. And if you're saying that, look, handwritten letters will work if you just write it down and just send it because you avoid the e-Oscar system, that's also incorrect. And I'm going to break down that myth in a very detailed manner today, elaborately, so that you can actually get the understanding as to why handwritten letters are just a joke. It just forces somebody to look at that letter because the system can't recognize it and ultimately follow the same procedures as a system would. It's just becoming more inefficient for them, but it doesn't necessarily mean you'll get a greater outcome. Right? It doesn't necessarily mean that you'll get a greater outcome. So let's go over some of the processes and procedures that happen as you send over some letters to the credit reporting agencies. So let's assume you send them a Section 609. Now, first and foremost, that goes in a whole separate category because the credit reporting agencies have been looking at this for years. They see these templates, they see the verbiage. They have algorithms, sophisticated systems in place to recognize wordings and put it together and get a certain percentage match, and based on that percentage match, they would go about automatically, validating certain accounts, or automatically disputing, or sending the ACDV and getting back an AUD from the furnishing side. So let's go over those details. Now, once you send that section 609 and the credit reporting agencies receive it, from that perspective, on their side, what they'll do is they'll create this ACDV form. Now, this ACDV form means the Automated Dispute Verification Form. It's basically a form that they send to the furnisher. A furnisher is essentially a company or a business that's reporting items on your report, on your credit. So it could be somebody like Chase, Wells Fargo. It could be a vendor, anybody that has access to your credit report that's month-to-month reporting, or let's say on a one-time basis reporting, and have the authorization to report. So that ACDV form is the verification form that the credit bureau sent to these furnishers. Now, once these furnishers get that information, they'll investigate. They have internal processes and procedures to look at the information, to verify cross-reference databases, whether it be CoreLogic, Intelligent IQ, a couple other different areas, including their public records. And then they'll say, look, this is the exact information that we have on file. The information that the client is disputing is actually, in fact, valid. And then they'll send back something called the AUD form. AUD form is an automated universal data form that's utilized for the credit reporting side when they get back to the investigation to say whether or not there's a validity there in those accounts, that it is actually verifiable, it is verified. And based on those specifications, the credit reporting agencies can basically give you an answer and say, look, based on our investigation, based on the furnisher's reply and our provider, these accounts are valid, these are accurate, and therefore we cannot adjust them as necessary. So these are the things that you need to understand. Of course, most of you probably already know this, but I'm just giving you a breakdown. And here's the reason why I'm giving you this breakdown. Let's go over the handwritten letter process, right? So a lot of people will say, you have to handwrite your letters and then you get a better response. Now, when you handwrite your letters, when you send it over, instead of the system reading it, somebody else is, correct? For the most part, yes, right? So when that person reads that handwritten letter, do you think that they're just going to simply overtake the business compliance side, that they just have all the right above their superiors just to make the decision on how to adjust a credit report? Of course not. The system will determine that there are access points for every individual that's working for the credit reporting agencies based on compliance and standards that they have to follow prior to getting consent, prior to making sure that an authorization is done, in fact, to which point they can modify the account. Now, your Section 609, it won't work because you're saying what ink signature, documentation. Here's the reason why it won't work. So in 2015, I believe, or 13, there was something called the Credit Reporting Settlement Agreement, or Act. In the state of New York, it took place. And this took place when the credit reporting agencies, including Innovis, got together and decided that, look, we're getting all these frivolous disputes of Section 609. It's kind of unfair because Section 609 has so many different components to it. How are we supposed to go ahead and challenge these things? How are we supposed to go ahead and adjust it? It's causing a lot of our resources. So they came to conclusion that, with the Consumer Financial Protection Bureau and the state attorney, particularly in New York, stated that, look, we're going to put together procedures and protocols in place to make sure that the items are accurate, that the items are valid, that it's not injurious to a customer's profile, that it's not hurting their integrity and the character. And what we're going to do this is in the ACDV form, the form that they send out to the furnishing side, we're going to have a section where you can put an image attachment. Now, that image attachment doesn't necessarily mean they need signed documentation. On the credit reporting side, the image attachment is simply something that is an additional layer. For example, if you have any supporting documentation of an adjusted payment, a balance is not showing right, your name is not properly spelled out, or something like that. Any type of supporting documentation or evidence that requires an adjustment. And this adjustment can be removing an item because sometimes the date of theirs is wrong, so it's disputable, so it can be challenged, right? So all these type of things have been added, and there are additional procedures and protocols like the CDIA, which is the agency that handles the Metro 2 reporting data format. These CDIA is basically a company that handles how the credit reporting agencies and the businesses that are reporting to them utilizing the Metro 2 system, how they communicate, how they are regulated. And the credit reporting agencies, including Innovis, form this thing called a task force. Now, this task force, their sole purpose is to make sure that the creditors or the furnishers are reporting compliantly and are following rules and regulations and protocols and have procedures in place to ensure that the information being reported is fairly accurate. Now, for the most part, CFPB, which is the Consumer Financial Protection Bureau, they can issue consent orders up to $100,000 per incident if anything goes wrong. So you can bet, for 100% of the time that most of the time they will do their very best to put information accurately on your credit report. So all these people out there that are saying Section 609 signed documentation, there is no ordinary need to get those signed documentation. There is no obligation for that. Credit reporting agencies can rely on the investigation of the furnishers, and from that perspective, they can verify the item. Now let's go into lawsuits, right? Let's assume that you're saying, oh, they need to have documentation, and you sue them. And you end up in court because you're fighting not just the credit reporting agency, but the furnisher that put the information there in the first place. Now, you're going to say, okay, well, I applied for a credit card, I defaulted. For a fact you defaulted, right? There's no escape from that. You know yourself better than anybody would. But let's assume that you actually take them to court because you're saying Section 609 is the way to go. It's going to make magic happen. It's going to make it rain. So let's go ahead and take them to court. Let's fix these problems. And then all of a sudden, the judge or the prosecuting side is going to ask you, hey, look, have you used this credit card? You say, no, it's not mine. They're going to say, okay, well, let's put a subpoena on this and go to the credit card company and pull out the statements. And if any of that, including camera footages and security, like let's say if it's a gas station or restaurants or whatever it is, demonstrate that you are the one who spent that, and they put in testimony from, let's say, the restaurant waiter or whoever it is, or the gas station clerk, and say, did this person use this, come to this gas station at this time and made this transaction? And then they pull the records and match it. Prepare yourself for a jumpsuit, orange jumpsuit, and go to prison for it. And of course, you're going to get a whole lot of fines from that as well for lying and perjury. Okay, so you got to be careful. And even if you were to sue them and you go to that route, and let's assume that, they don't ask you that question if it's whether or not it's yours, but they ask you, do you recognize this debt? Do you have a statement? Can you swear in it that it's not yours? And if you have to sign an affidavit or go under deposition and you lie, that's another form of perjury, and you will go to prison for that as well, in addition to getting, hundreds of thousands of dollars in fines. Now, a lot of people in the Section 609 so-called experts don't talk about the different type of litigation issues or potential legal threats that you can go under, and the stress and the anxiety that you have to go through on months on end for something that can cause you a lot of harm. So you got to be careful with Section 609. Signed documentation is not necessary. They don't have to have that. Okay, if you're thinking it's necessary, you're wrong about that. And I give you an example. I just told you, if you apply for credit cards online in all these different areas, you know for a fact that you don't need signed documentation. So why are people pushing out there? Do you think that these companies are dumb enough to just leave that information and make themselves and give themselves more exposure to risk and just continue business that way? Absolutely not, right? Because they are for-profit companies. Unsecured credit is basically based on your credit. It's not based on any type of collateral. So they're taking a whole lot of risk. Yeah, the interest rates are high, but that's how they make their returns quickly, right? So you got to be careful with the whole Section 609 myth. I just wanted to demystify that concept. I want you to understand that below this video, there's the Credit Reporting Settlement Act. Read it thoroughly. Have a look through it. Go to Cornell Law, 1680, I believe, United States Code for Fair Credit Reporting Act. Read on it. Understand what that means. And look through different case laws. Sign up for PACER. PACER is a system that collects all the type of litigation, lawsuits, all the civil, federal, anything that you can think of in terms of legal issues. And then they report that, and then you can read on the cases that are there. You can read on different type of situations that happen with the credit reporting agencies, and you can see the judgments that were issued. You can see how the courts favored who. and I want you to basically, gain some knowledge out of that. Of course, I'm going to do these videos, but the first thing is, like, if other people are trying to, misinform you and giving you the wrong information, then it's not helping anybody. It's just helping them by selling these used templates from 1989 and just mixing it up and adding some fancy colors in boxes and acting like clowns in front of the camera. I mean, that's all fine and dandy, but end result is you want something that's legit, that's going to work. And we're talking your financial condition and your circumstances, your financial well-being. It's very sensitive, and you need to be very careful with the information that you're hearing out there. So I want you to be ready with that information. And let's go over one more thing, okay? Now, a lot of people will say, well, just continue redisputing, continue, resubmitting the Section 609 and stuff. How is a frivolous dispute determined by the credit reporting agencies, right? Now, there's a couple of ways to determine that. Now, first of all, if you have items that are, for sure they're disputable, you know that something's off, the information's off, it's not legit. From that perspective, if you dispute it, maybe there's a chance that it'll go off, and you have evidence that it's not correct. Regardless of whether or not it's valid, then there's a whole chance of taking those items off. So you got to tackle the reporting and the repair side on that specificity. Okay, you got to go on that direction. Now, there are of course other challenges, like you go ahead and say, look, you're not compliantly reporting. There are some inaccurate information, misleading information. It's injurious to my integrity and my character and my ability to borrow. You can go that way as well. So I want you to be very careful with Section 609. I hope I opened your eyes to this. To understand why it doesn't work. I want you to understand handwritten letters or not doesn't make a difference to the protocols and procedures that are written in stone in terms of how to go about disputing and investigating an item on the credit reporting side. Whether it be Experian, TransUnion, or Equifax, everybody's got to go through the same process. The CDIA, once again, is the agency that handles the reporting side, both furnisher and credit reporters, in reference to the Metro 2 compliance standards and format. The Credit Reporting Settlement Act, once again, is an agreement between the credit reporting agencies and the Consumer Financial Protection Bureau, along with the state and federal bodies, in reference to pushing more compliance out there, pushing things in order for investigative procedures for disputes, to make sure that items are reporting accurately. So these are some of the things that you need to come to light with, and I want you to realize that if you're on my channel, I'm not going to give you BS. I'm going to give you everything straight. Sometimes it's not the most pleasant thing to hear, but at the end of the day, it's for your own good. This is why I'm here. So once again, this is Ali Taraftar, your guide and mentor. If you like this video, give it a thumbs up. Don't forget to subscribe and turn the notifications on. And I have a series of playlists. Feel free to look at them. Get some knowledge, educate yourself, and leave some comments below if you have any questions. I'll be more than happy to answer them. Or if you want to personally, and privately message me, it's at talk@bestcreditresources.com. That's, once again, talk@bestcreditresources.com. This is Ali Taraftar, you got a mentor. I'll see you next time. Bye for now.